Hello, everybody, and welcome to the 74th edition of LM's Weekly Wrap, our weekly program for the market related developments. This week, in many ways, was quite significant for the markets, for the market participants, irrespective of the category of the market participants, whether they are involved in the primary markets or whether they are involved in the secondary markets. It was in many ways a landmark week for as far as the IPO markets was concerned, because we had after a gap of 2 decades an IPO from the Tata Group, Tata Technologies, and true to the reputation of the Tata Group, I think we had a phenomenal response not only to this IPO but to all the IPOs which hit the markets in this particular week. And I think everyone has had a stellar listing, and I think investors no reason to complain at all. And we've seen a phenomenal run in the markets as well. We've got good supports from the global markets as well. So joining me just now is Jash. Jash, welcome to the show. Kindly take us ahead on the markets, and that will be followed by the sectoral outlook from my side.
Thank you so much, sir. It's a pleasure to be here. First of all, I would like to congratulate everyone. Nifty has touched a new high today. It's gone beyond about 20,000 levels. And I think everyone's very happy. No one anticipated it to go so quickly, but yeah, we've still got it that quickly. Coming to the markets, the global markets, and I'll start with the Brent crude. Brent crude is extremely stable at $80 a barrel. That's where we saw the turnaround of our market when Brent started going down. Especially after the FOMC meeting, we saw them having a long pause before any kind of action in the rate. So the low bond yields have already been factored into the market. That is why the global markets have also shown positive returns in the last 1 month. We mark the end of this last month of the festive season, and we saw Nifty gaining about 5.5%. That is a massive gain, and the mid cap index gaining about 10.37%. I think this is all numbers seem unreal, but this is how the market is, and once you're always invested, I think you are supposed to get into the cycle, and the cycle does reward you in the end. Like, you have to be a sticky investor. But of course, saying that, we'll always say that, keep booking your profits, otherwise it'll be difficult to enter at lower levels, as this is a market with the cyclical factors are always there. Coming to the Indian markets, I think, as I already mentioned, Nifty has performed extremely well. We have our 4-state election results on Monday. Also, we had our GDP number, a massive 7.6% growth rate in the last quarter, which is a very good rate. It was contributed by industrial, mining, and manufacturing sectors. So we are seeing a lot of good spending, capex. There was a massive capex investment cycle that has started now. So we see if we see the distribution of funds, there has been more of investment and capex and less of consumption, where India is always a very strong consumption theme. So the manufacturing outran consumption. So in the next few months, I think when consumption comes back and both these engines fire together, we can only see the good side of the market. So we are anticipating the good side of the market, but the market will remain volatile because of the general elections that is going to happen in May 2024, and some kind of direction will also be seen in the coming week with the 4 state elections that will get over. It's going to be quite volatile. We should be very skeptical and very cautious, I would say, in investing any new money right now. We should pause and invest in every chance we get, but not go all in at once. And that marks the end of my global and domestic scenario. And I'd like to hand over to Nirav, sir. Thank you.
Thank you, Jash. So I think yes, as pointed out rightly, that the consumption theme has slowed down a bit, and as far as the GDP data is concerned, But this could be attributed to one factor, that is inflation, because
Correct.
inflation has been on the boil, and we've seen in quite a few foodstuff items, etc. Due to the unseasonal rains, etc., there's been a sudden spike in the prices of food, eatables, etc., cereals, pulses, milk, etc., where the prices have gone up. So the overall daily budget, as far as the normal man is concerned, has gone up, and this in a way does put full stop on the consumption items. So I think that is the weak side of the market, but I think nonetheless, I think still we are seeing a good performance as far as the economy is concerned. Starting off with the different sectors, I think first of all is auto, as we have always been discussing. I think we have discussed earlier also that auto is going to be a very big trigger for the markets. This has been one of the sectors which has been completely resilient as far as the price hikes are concerned. It has been effortlessly passing on the price hikes to the final consumers, and still the demand continues to be very, very robust. This week we had the FADA data, and they have been very, very bullish about the performance of the SUVs, about the performance of the two-wheelers. And I think, as we have pointed out, the two-wheeler pack has done very well. It's been a beneficiary of the festival demand. It's been a beneficiary of the wedding season sales, and the revival in the rural economy. So I think Hero Motocorp, Bajaj Auto, I think all the numbers have been good. We believe that even Eicher Motors should be benefit on account of the premiumization agenda, etc. So the two-wheeler pack doing quite well, passenger vehicles doing reasonably well, commercial vehicles just chugging along well. Tractors is a space which has been under some sort of pressure. So I think overall auto doing well, auto ancillaries also likely to do well on account of these developments. We have banking. In banking, we did see a rally. One of the big gainers of this week has been Axis Bank, but the rest of the banks like HDFC Bank, ICICI Bank have kind of given up their gains. And as we have pointed out earlier, also the NIMs have peaked in the third quarter of FY23. So I think we are definitely going to see going forward there's going to be a pressure on the margins as far as the banks and NBFCs are concerned. And we've seen statements also coming in from the Reserve Bank of India, where they are talking about the fact that the exposure to unsecured loans as well as banking sector's exposure to the NBFC sector remains a cause of concern. So I think banking is going to be under pressure, at least in the near term. Third is the capital goods. Capital goods continues to do very well. I think we've seen yesterday's data, the thrust on infrastructure. Construction equipment, etc., is going to do very well. Today also, as we speak, we've seen stocks like Alicon Engineering, Triveni Turbine, Action Construction Equipment, etc., continue to do very well in trade, and there's no reason to believe why this outperformance will not continue, at least in the near future. After this, we have is cement. There's signs of consolidation clearly visible in the cement sector. Yesterday, we've seen Ultratech's acquisition of Kesoram, and that too at a huge and a substantial premium. I think the deal was done at close to $85 a ton in terms of capacity. So I think it's a very, very positive. It's a win-win as far as Ultratech is concerned, and also as far as Kesoram is concerned. We could see a lot of stocks in the limelight, especially the likes of Heidelberg Cement or the likes of Prism Johnson. These stocks could be attractive takeover candidates in the near future. So a lot of stocks are buzzing around on this development. Orient Cement to up in trade. So cement is one sector where there is going to be a serious restructuring which is expected in the near future. So we have large companies like Shree Cement or the likes of Ultratech Cement, which are constantly scouting for acquisitions. And yesterday we've seen some good momentum in India Cements also. This could be a likely takeover candidate in the near future. So cement continues to be buzzing in trade. As far as other sectors are concerned, we have seen FMCG continue to do reasonably well in trade. Today, as we talk, there is revival in names like Marico, Dabur, Colgate Palmolive. ITC too has moved up in trade today. So FMCG is definitely sensing a revival in the rural economy and is trying to make a comeback. Pharma continues to do well. We have Cipla, Lupin, Sun Pharma, which are at inflection point and which have a good potential to move up from the current levels. IT will remain under pressure. We have indicated this earlier. We could see some bargain hunting happening, but nothing more than that. And I think the winners of the market is undoubtedly the PSU space. We've seen very strong traction happening in the PSU space, whether it is Indian Oil Corporation, which was one of the big winners of this week, BPCL, which has been a big gainer in this week. We've got NTPC, which has done very well, GAIL, which has done very well, Coal India, which was our LM weekender stock idea, which we have recommended at 234 with a target of more than 330, and still we continue to maintain a buy stance on this with a target of 486. So I think Coal India continues to be a strong story, and we have Diwali picks which continue to do well. As we talk, GSW Infrastructure has hit 223 levels. Geo Financial could benefit on account of the MSCI additions. So I think a lot of stories which are there, which are looking quite exciting. Moil, of course, has hit its target already, and Sri Renuka Sugars are expected to do well. A lot of things to discuss, but paucity of time again will restrict us at this point of time. But we will be back next week with a lot of exciting themes. And this time around, from next week, we will be trying to give a different perspective to our program. Because we've been discussing a lot of sectors, but I think now we will be doing some deep diving into each of the sectors on a weekly basis. So that kind of sums up the program from our side. I'll hand over to Jash for the closing remarks.
Thank you so much, sir. That was quite insightful. And yeah, so basically we'll be taking a sector-wise session from the coming week, so it might be easier for our viewers to understand. Thank you so much.
Thank you.